The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, Happy New Year. Welcome back to the program.
Oh, it's good to be back. New year, ready to go.
Indeed, we're ready to go, and we have nothing to do but what's in front of us. And if you don't mind me saying, sir, and I say this with a lot of respect, because I do have a great deal of respect for you, we were talking about $40 silver before the end of 2012. Those were your words. I think it didn't happen. We can't blame you for that. But as an investor in silver, not only in physical silver, but stocks, what should we do? Should we just keep accumulating?
Well, a couple things. One is I said 35 to 40, and you're right. By the end of the year, it is sold off almost in an identical manner to what happened the previous year. And I did kind of see that happening and didn't really open my mouth to anybody, including my members. I might have mentioned it maybe on one show. I honestly forget. As far as did it hit 35 to 40 by the end of the year, actually, yes. I want to be very clear and keep my integrity here. I thought, by the close of the year, you'd see it to the 35 level. Obviously, I was wrong on that. What do? We don't really change anything because the fundamentals haven't changed. I mean, really, the main problem with, some people is when they got in at a higher price, and no one likes to buy an investment and see it go work against them, especially if it's worked against them basically from the time they got in. And there are people that got in at, 35, 38, 40, 42, 44, whatever. And those people currently are underwater, or if they would sell, would be losing money. So I would ask them to just think through, why did they buy it in the first place? Why did they buy silver? Why did they buy gold? Why did they buy both? And the answer is because of, and you fill in the blank, and primarily the reason would be due to the current economic conditions on a global basis. If nothing has changed on that basis, then I would certainly recommend that they hold to their conviction. On the other hand, the other problem is a lot of people basically will buy more than they should have. That is something that's totally out of my control. In fact, it's contrary to what I teach. If you go to the 10 rules of silver investing, I basically say start small. You can always add more, but people get emotional. They get excited. The market's moving. They think they're going to miss the train, so they jump in with both feet, only for a few days later, a few weeks, or a few months later to regret the fact that they put so much in at one time. That's why dollar cost averaging suits most people, because most people really don't know how to time markets. And you gave a good example. I've been one of the better market timers in the precious metal sector all the way up and down, but not infallible. And so the last thing, and, kind of sounding defensive, but maybe not, all the stuff I do on radio shows like yours, Ellis, is basically in the public domain. And what I do for the paid membership is much more detailed and much more concise and precise on what to do. And I don't do that for radio shows because people pay me for that thinking. So there are certain levels that silver would have to breach in a certain manner and for a certain amount of time before I would be willing to put money into the market. And that's what I do on this paid service. So it's not contradictory to what I'm saying in the public, but what I say in the public is in a general way. It's not specific like I would do for my own trading, which is what I give people access to if they pay me. So is it identical to what I say in public? No, it's not. In fact, the qualifications, the absolutes that had to take place in order to get long in the silver market on a trading portion, not the core position, which I teach people to buy and hold regardless, but the trading portion, which is only a small amount relative to the overall position, whether to get in or not, that was never triggered. So, again, I might sound defensive, but I want to give the total picture because a lot of people, listen to shows and it's like, well, he muffed it and, he muffed it once or twice and, what does he know? Does he know what he's doing? The actual honest-to-God track record for what we've done is pretty darn good. Again, not infallible, but it's much more specific and much more detailed and much more geared toward the market, proving that things are going up rather than saying, not in a cavalier manner, but I mean, I'm asked this stuff all the time. It's part of my job. Well, where's the metals going to be at the end of the year? Well, I think they're going to be here. But as far as the trading side goes, if it doesn't do this, and this within this time and on this volume, then we're not going to do anything. Specifically, what was I doing? I was watching it. Didn't get involved. My core position still intact. Adding to my physical holdings, yes.
Well, to be fair, I should have said the truth for the most part. For as long as we've been doing these interviews, several years now, you've been spot on, and I don't think we're far away from $35 to $40. Now, do you see anything geopolitically happening with regard to the financial markets to give those that move on news and emotion any hope to ride any potential wave?
Couple. One is that this Bunza Bank, have you stated, ask for the gold back, and then the reply being, oh yeah, we'll give you gold back over about 7 years. I mean, this is ridiculous. Just totally ridiculous. So I think that is an emotional factor that could play in the gold market. As far as on the silver side, very recently there was news that the silver manipulation case against J.P. Morgan has been dismissed. And that, of course, will get a lot of silver people very upset. I'm just going to read the first paragraph here, but the federal court dismissed a class action against J.P. Morgan and its subsidiaries, 20 unnamed John Doe defendants of the silver manipulation. Judge Robert P. Patterson Jr. found that the complaint contains many conclusory allegations, but fails to provide the specific factual allegations needed to substantiate a claim. So all these people that had individual lawsuits were basically told by the court that they're going to pool them into one class action, which, I'm not a lawyer. I mean, I've studied contract law. I know a fair amount about the legal system and what the proper jurisdictions and a lot of things are. I don't want to give legal advice. I can't. But I question why or how they can just take all these individual lawsuits and put them into one. But anyway, that's what they did. And now they dismiss it. I can kind of get the idea of, their argument for why they dismiss it. But, you probably have some questions on that.
Well, I do. Is this a case of the industry regulating itself somehow? I mean, the bank is involved with the Fed. It's one of the 5 major world banks. Can we trust this?
No, I mean, this is opinion, not fact, but it's been pretty well recognized from other lawsuits, one that GATA did, that J.P. Morgan is kind of the government's bank. They certainly have one of the largest derivatives positions of anybody, and they certainly sell a great deal of treasuries out in the open market, which, of course, is how the government borrows money that they don't have to spend on things we don't need. So, yeah, my opinion is yes. And the other thing I think was under the comments section, reading from this math daddy, he says, so on May 1st, 2011, when the price of silver dropped $6 in a span of 15 minutes, that was due to unmanipulated fluctuation, ? I'd have to go back and look at the chart, but what I do recall was there were certainly more than once over the last decade or more of huge price drops in the silver market. One that I do remember specifically because the date's so unusual, it's the leap year date, was the February 29th date a year or two ago, and I did a video on it, taking up on another video from Brother John F. had done one about this huge drop in the silver market in a matter of minutes that took place. And this was during the testimony of Ben Bernanke and Ron Paul, and that was the famous one where Dr. Paul held up 1 silver ounce and explained that this ounce of silver preserved purchasing power, and that this is money, real money, and that why can't we have a system where you can have, real money and the private script by the private bank that's, basically monopoly money that people buy into and have a choice. And Bernanke kind of squirmed around. It's very interesting. You might check it out. It's called Silver, the Achilles Heels of the Financial Market, something like that. If you type in on the Silver Guru channel, my channel, Silver, the Achilles Heel, it'll pop it up for you.
And that's on YouTube. We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
And we're back. One can take a look at silver investing right now and say, well, okay, it seems like something smart to do. I've made money in silver in the past. I've made money in silver stocks previously. But ultimately, aren't you just going to a casino where the odds are rigged now?
Yes and no, and I want to clarify that. Are the markets manipulated? The answer is yes, but there's enough free market forces for the market major trend to continue. And the major trend for both gold and silver has been up. Now, we have had these long consolidation periods. Quite frankly, when I saw silver move from basically the $26 level up to $48 in a matter of weeks, it concerned me. I really strongly thought and acknowledged at the time, specifically for our paid members, that this thing had gotten overbought on a temporary basis. Silver had gotten ahead of itself. And of course, people don't like to hear that because they have their own belief systems, and I have mine, and no one knows. But I've seen this so many times, especially in the silver market. I study it so hard. And so I basically said for the trading portion, get out at around the $48 level. Turned out to be within a few days of the actual exact top. I mean, anyone that got out then that was either leveraged or not leveraged or put to protect your position or whatever, be very, very happy. In fact, I've got stories about that I won't go into. So I thought the following year, doing early shows like yours last year, that silver would recoup rather substantially during the year 2012, and I was wrong. And I acknowledge myself being wrong fairly early, like around March. But people love to adhere to, some people, not all, but it's like, oh, well, you said this, well, I have the right to change my mind as much as anybody else. What I didn't do, and what I should have done or could have done earlier, was to look at that kind of a rapid run-up in any commodity, and then, of course, silver, and get a feel for how long it would take to work off that kind of overbought position. And what I determined was it was 1.5 to 2 years for that to take place. And we're almost at the 2-year mark right now. So I changed my opinion. I said, I didn't study it hard enough. Now that I have, I don't think we're going to see 60 at all. I think we might see, the 40 level, which actually during the year, I think we definitely got over 35 a few times. I'm not sure we hit 40. I have to go back and look, even though I have most of these charts sort of memorized. Anyway, the point being is that as the market evolves, I can give better information. I mean, it's an information-based society. I'm on top of it along with my staff. I don't get it all. Sometimes subscribers give me stuff that's very helpful to the membership. Obviously, we sincere do our best, and things change rapidly in today's information society. So what's really appropriate on December 1st, 2011 might not be very applicable January 14th, 2012. And I'm not trying to make excuses, but you got to be very, especially if you trade, you've got to really be able to admit when you're wrong rapidly and, take a quick loss or whatever and move on. I mean, that's the nature of the business. So people that are always saying, well, you said back when. Same thing with the mining companies. I mean, sometimes things change very quickly, and so we'll sell something, or it'll stop out, or whatever. I mean, this is a dynamic market. All life is dynamic. There's very little that's static, that just rests and stays in one place and doesn't change. That's the anomaly. The reality is that things change, and sometimes change quite significantly. So to stay on top of that is why you would want to either dig out all that information on your own or subscribe to a service or 2 or 3 that you can make up your mind on, whether that helps you or not.
And conversely, compared to my question that began this interview, if you're a long-term, conservative, educated silver investor, you've done very well over these past few years. What percentage of the masses came in at $45 or $48 an ounce after all? There's a great deal of folks that are just happy and patient at the moment at $31 an ounce.
Absolutely. That's another thing to get off the chart. I mean, if you see how few trading days actually were at those levels, you'll find it was extremely small. So the opportunity to even buy at those levels was extremely, extremely short. Are there some people that are locked in there? Yes. But relative to the entire market, there are very few of them, as you said. And I want to back you up, because that's the other thing, about the $50 price. It doesn't annoy me, but I'm as guilty probably as anybody out there because I get interviewed so much. Did $50 happen? Yes. How many trades took place? We don't know, but it was a one-day event, and there weren't probably that many trades in the silver market at that price. I don't know, and I cannot get the data. I would love to have it. Point is that one day doesn't make a market. I think the better way to look at it, and I've written about this in the Morgan Report a couple times now, is that the average price for 1980 was like $20. That was $20 in 1980, which is significantly more valuable than $20 in 2013. So that's an average price for an entire year. I think that's a lot better basis to look at relative to where, silver could or should be going relative to the one-day price spike. But nonetheless, it exists. But, again, it's not really thinking very carefully. It's like, I'll make up an analogy quickly, but it's like going out on a fishing expedition and getting one of the biggest marlins that ever happened in the Cabo San Lucas area. And all of a sudden, it's like, well, this is the greatest fisherman of all time, and when you go fishing off of Cabo, this is what you're going to get. No, it's an anomaly. It's a one-time, one-off thing, and that's what took place. I think too much is made of a one-day event rather than looking at the market in a more total basis.
Physical silver investors have nothing to complain about overall. However, let's just say that for the most part, junior mining stock investors have been severely beaten, mugged, and thrashed. But yet, there's opportunity.
Absolutely. I can't emphasize this enough. It's very apparent to me, but I had the benefit of being an investor for over 40 years and mostly in this sector. So what I would say is that part of the market, these junior explorers or junior market in general, is not the place to be heavily invested during this part of the cycle. We're nearing the end of the precious metal cycle as far as I can tell. So you want to be in companies that are producers, that have earnings, that are going to continue to earn good profits and have a way to increase their profits, either by increasing their margins or price going up or combination, and there's other reasons that could happen. The exploration companies are almost dead. Now, that's not to say that there won't be one or two more discoveries before the cycle ends. And the hope that I can give, and it is hope, and it's a strong opinion, but it is based in fact, is that once the cycle starts to get overheated again, the latecomers to the market will pour into junior mining stocks. And the reason being is that human nature doesn't change, and that people want and love cheap stocks, and those are cheap stocks. So there'll be companies that are dead that have hardly any volume at all, but once this thing lights fire, there'll be a lot of newbies that'll be coming in, and all these storage stocks will gain rapid price movements upwards for the most part, but it won't last very long. In fact, it's one of the main indicators that I'll be using in our work to help people to exit. And it's going to be hard because people will get psychologically bent on the idea that this market can only go to the moon and it's going to go to the, Mars and beyond, and, I'm wrong, and on and on and on. And I like selling into strength, not weakness. I like leaving some for the next guy. And so, when I'm making my calls, I'm sure there'll be people that will be loving to call me names and all that kind of thing, but I'm not really that concerned with what people have to say about me overall. I'm more interested in doing the best I can to make profits and not get too greedy.
You've pointed me recently to a website that you're involved with. It's called richesandresources.com. I've pulled it up, and on the home page I see a list of about 10 companies, and I think they're all producers. Research reports are available on all of these companies on this website. Now, why might this be something that we as listeners and investors want to participate in?
Well, as you know, I'm very free market driven, and there's actually, I think, 22 reports on there now. We only feature like 10, so you'll get the idea. There's a pull-down menu. But what we found is that a lot of people really don't care about my opinion or anyone else's, or they don't time the market, or even if they do, what they're primarily interested in is looking over a company before they invest, or in some cases, verifying why they bought a certain company. So these are just one-off company-by-company reports, and we'll be adding to them from time to time. By the way, it's really not my website per se. It was started by a couple of guys that have been doing work for us over time, and they suggested the reports that they wrote be available on a one-to-one basis. So these are reports on companies, primarily mining companies, primarily producers, as you said, that you can buy, and it'll be, in my view, a very smart way to look at, what the cash flow basis is, what the internal rate of return is, whether the company's making money or not before you make an investment. And again, they're all people that have an investment in some of these companies that the reports are available upon, and they'll want to go ahead maybe and look and verify what it looks like on a discounted cash flow basis, say a couple years out. So it's a good way to get some information that is hard fought, if you will. In other words, these guys know what they're doing when it comes to analyzing a company, any company, be it a mining company or not. The problem with, like, the sector we just talked about in the exploration or junior side is most of them don't have any cash flow. They're burning cash. They're not producing anything other than hope that they'll find something or that type of thing. So those type of companies, will they be available? Probably. But again, those type of companies really cannot be analyzed in a real financial manner. I mean, really, the stock market is not that complex if you break it down to what it's really all about, and that's about earnings. Either you're making a profit or you're not. And if you were going to start a business, Ellis, would you start it with the idea that you want to lose money? No, I doubt it. You'd start it with the idea you're going to make money. And so that's how you invest in any investment. Now, there are exceptions to that, and the art of speculation is fun, and I've done it, and I continue to do it. But this is with money you can afford to lose. You don't want to put money into a speculation or a business that's losing money or has no way of really making profits unless they win the lottery. That's a lottery ticket. You should approach it in the same manner you would as a gamble. I mean, you're taking maybe an educated risk. In some cases, that's doubtful. But if you want to risk it, go ahead, but know what you're doing. But to sit there and listen to some convoluted story about why this company has 50 million ounces of silver when the thing's been mined out years ago, I mean, that kind of nonsense happens. And for whatever reason, people buy into it.
Well, I think if you're going to put serious money into serious stocks, and I think I'm paraphrasing you should spend a few dollars and do the homework by taking advantage of good research.
Absolutely, and it doesn't have to be me doing it for you. If you got the time, do it yourself. It's really not that complicated. A common sense approach to a lot of situations in life is a very good way to go about your life. But unfortunately, as one of my subscribers showed me long ago, he says common sense isn't too common, and I agree with his statement.
David, it's been great catching up with you. It's always a pleasure to have you on the program. I look forward to speaking with you again in the near future.
Well, thank you, Ellis. My pleasure.
We've been chatting about the website richesandresources.com in this interview. David's website is themorganreport.com. I've been talking with the silver guru, David Morgan. Listen to this segment again on the podcast page of our website, ellismartinreport.com. This segment has been sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.